Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, leverage can make you a lot of money in the markets. It can also lose you a ton of money in the markets. We're going to talk about what's brewing right now. You're not going to miss this. Let's dive in.
Trade Genius.
So Bob, I know we're going to talk about leverage, but before we dive into that, very interesting order in our volatility. We just talked about volatility, and very interesting order flow came in on Friday.
Yeah, one of our reports showed up on SVIX for volume. And on a Friday, when nothing's happening, this thing printed a massive level of volume. I think, Phil, is the number one volume. I'm going to throw it back to you because we talked to you guys about this before, that the Vomageddon scenario is back on the table, and not 2 days later we get a high volume print. And Phil, you deal with this one more than I do. Does this look like a buy to you or somebody dumping?
Well, usually when you're at the top of a move like that, when an institutional order comes in and it's that size, normally they're not initiating a position to go long at the top of a move like that. Now, if we saw it at the bottom there before November, then yeah, for sure that's probably a buy that comes in.
Yeah, and the other thing too is, and I didn't bring the chart up, and we'll go to our main reason we're here today, is also massive volumes in TLT too. So somebody's positioning for the party might be over. And now look, before we get any kind of hate mail, this can happen Monday or this can happen the 15th of January. But big money is changing direction here, guys. And if you're a day trader, you can care less. But if you're a swing trader, we have portfolios like we do, you need to start, the ship is turning. You got to be really paying attention to this. Now, a little bit on the good news side here, Phil. This is amazing. It might be happening. It's happening. Silver is starting to get bids, and the silver miners are starting to get bids. And I want to throw a chart up for people that you might want to screen capture this. I grabbed this thing off of X, but this is the leverage that some of the operating leverage that some of these miners have to the price of the underlying metal. And the reason why I like Bitcoin miners and I like silver and gold miners, even more so than owning the underlying, is operating leverage. And look at these different companies. Now, two of them came to my attention that should be interesting. One I didn't buy on Friday, but two others I did to add to my portfolio of gold and silver miners. So Santa Cruz silver is leveraged 20-1. That means, a dollar higher in silver goes much, much further to their bottom line than somebody like Anglo Eagle or Freeport McMoran, Phil. And I just thought people look, and that's, I was looking at the chart on that one. That's a lotto ticket. But the one that really interested me because the charts look good is FSM. And people need to take a look at that one. We went ahead and bought it. It's making higher highs, higher lows. It's over its vol stop. And I think this thing could really go. What I didn't buy is I didn't buy new gold, and I might buy it next week. That's the other one that has high operating leverage. I just didn't want to deploy any more capital than I did. Now this goes to with I already have wheat and precious metals. I already have CDE. I already have GDX, GDXJ. I got Hecla mining. So I do need to add another gold miner to my position. And I think I'm evened out here on my silver position. So I wanted to bring that up. That's the plus side of leverage, guys. When money starts moving into these positions and the underlying starts to move higher, you're going to get massive, massive cash flows generated. And companies like Santa Cruz and these other ones that are basically 4 to 6 and plus, a lot of them will just get taken out. So if you start seeing mergers and acquisitions on some of these high operating leverage companies, the big boys are going to come in there and they're going to try to steal the underlying reserves because it's cheaper for them and they know they're going to get it drop right to the bottom line. So that's it on the silver side. I know you don't trade the metals and miners too much, but the next chart is I think you're going to find extremely interesting, Phil. Remember, I go on Twitter every day and I just see these people saying, oh, those idiot bears, we're ready to blossom into a new bull market. The Fed has been unable to stop this juggernaut.
Right.
Well, I think they stopped it for 493 stocks, Phil.
Yeah, it's a crazy concentration we have now in the Magnificent Seven, right? But the Fed, I mean, ultimately, if you historically looked at the market outside of these weird concentrations that we're getting into now, their plan would have been working, because look at all the money, the blue line skyrocketing into money market funds, as it should, right? I mean, that's, if you're not getting returns in the overall market, and that goes back to what you say about, and people get confused about this, but you say a lot of people in their portfolios really aren't making any money, because if you look at the equal weighted index, it's negative or flat. So why do that? And the Fed's not anywhere near reversing course on their position. So we know the Fed policy is working on most portfolios because it's stagnated the growth, or they're slightly negative. So you're going to want to go into a money market fund or something like that. That's going to give you 4 or 5+%. But we have this weird anomaly where we have the Mag 7. And the reason for that is because you still have market participants and funds and things like that, and CTA controlled flows that are trying to chase alpha. And really the only alpha is in those 7 stocks. Nobody wants to participate with the rest of them and try to get some momentum down there. Nobody wants to be the guy to put their foot in the water first with the rest of the market. Everybody's like, forget it. Let's just chase alpha. It's going to be these 7 stocks. And that's just it. So I don't think that's very sustainable. And then you had mentioned something too, a couple of videos ago, about the flows that are coming in from, or should say the flows are coming out of the market because of the huge amount of debt coming online. I think we're up to like 170 billion of long-term notes, bonds, not bills, but bonds over the next couple of weeks here. And no matter how you slice it, that's going to negatively affect the markets, because now the markets have this very sensitive relationship to the treasury issuance.
Hey guys, we got Black Friday specials. They're really cool. We have the best pricing for the year. You can get our basic package, our advanced packages, our VIP rooms, software, trade options, trade crypto, trade the futures. With us, get our indicators, best prices of the year. Take advantage of it. Thanks for listening.
This goes back to, Yellen killed the 50 basis points for the Fed because the market was so afraid she was going to come out with more debt issuance that when she actually came out with like 100 billion less or something like that, they rejoiced and actually bought some bonds. So they're very sensitive to what Yellen's doing because she's just going absolutely crazy with debt issuance. So nobody wants to be long debt, long TLT if she's going to crank that up. If she shows any weakness or dovishness as far as her aggression in terms of issuing debt, TLT is going to pop. And that's our current environment. And that's really what's the sole driver, I think, of the overall index right now.
Yeah, the way I look at it, Phil, is that, this higher interest rate's kind of like, you have acid dripping onto metal here. And eventually enough people are going to say, I like the consistency of my income stream at 5 and 5.5% than I do with whipping around trying to manage 7 stocks that are already twice the valuation than they should be for the growth that they're producing. And, obviously everybody's trying to make their nut for the end of the year. So it makes some things a little bit distorted. But, Andy Constant said something really interesting. He thinks the rest of the market breaks down if the Fed can engineer the 10-year over, I think, 5.5%.
I agree.
If he can get that over 5.5%, all bets are off. And, I have no idea why that number is important, but he's in that realm. And so he obviously knows. It's either the way they package their product set and the way they can. Remember, Jam Croissant was talking about, I could take a 5.5% or 5% 10-year, and I can add 2 basis points on it by structured products. So maybe that 5.5% turns into a magical number that pension fund administrators absolutely have to have. And then everybody's out of the stock market.
If you look at the relationship of the yield to the market, when the market is having trouble, yields are cracking over 5%. So that there is that threshold there where the markets are struggling. And like you said, it could be because now it's becoming more attractive. It's a threshold that someone has basically, or the market, I should say, has established as whether, risk off for assets over 5%, risk on for assets under 5%. But it's definitely, you can draw a line on that yield number and the market, you can see how the market reacts around that.
Yeah, and the other thing people don't realize, as you drive the VIX into the floor, this is the game that you play, Phil, on the future side. It squeezes down the ranges every day. Mm-hmm. And it just puts more and more risk on. It's like you're drinking more alcohol as you're driving down a highway. Right. When you just keep doing this, eventually you're not going to be able to have the reaction time to avoid an accident.
Right.
And so we're driving the VIX under 13 again, which compresses the daily ranges, which makes people look at it and say, calls aren't worth it to me, which then starts the reversal process. And somebody says, hey, puts are pretty damn cheap. I'll start buying those instead of selling those. And next thing you know, with all that leverage piled up, it's like having a high tide when the hurricane storm surge is coming in. And I think people don't get that because they don't see it until the wave smacks them in the head. And we're here to warn you that a Cat 5 storm is coming. It's unavoidable. It's simply physics. We just don't know when the hurricane's going to come on shore exactly. People smarter than me say it's the middle of January, and other people just as smart saying between January and June is going to be troubled times for the market. So
correct.
And we're just here presenting data, and the data agrees with that.
Yeah, and again, this SVIX, again, this is a short VIX future ETF, and if they're putting in the largest order in the history of this instrument at the top of the move, what that's telling you is two things. One, they're either closing their short trade, meaning they're expecting VIX to go up a lot. There's a sizable move in VIX brewing. You're not going to get a number one size trade in the history of an ETF unless they expect a large move. So given the location, this is either closing a short or initiating a short position on a short. So if you're shorting a short ETF, then you're expecting VIX to go up a bunch. Okay, so that's just, I want to make sure everybody's clear on that. So what does it mean going forward? If you're watching SVIX, watch this $34 area, okay? If they're shorting this market, we should see, now it can go over 34. Sometimes these institutional orders don't get the timing exactly right. So if you drift over 34 and you start seeing it come back in, the next important area is going to be, you see all these lines here? This is where all the institutional activity has taken place. So you're looking at between $29 and roughly $27. Okay, that's going to be like the zone. If you start dropping under 27, under 26, then the party's on. Volatility is going to be cranking way up, and you guys got to be ready for a lot of market volatility that's going to come in over the next month or so.
Yeah, people don't understand volatility because I used to trade this a lot, and I traded this XFIX move twice on this move up. So it's when it goes your direction, it's great, but it resets twice a year, Phil. And look at the reset it did there. It was hardly a burp for the October sell-off. And so it is due. I live out here in Orange County, California, and we get the probability of earthquake reports come out. The quieter things get, the higher the probability goes up. You're going to have an earthquake in a certain period of time. Go back a couple weeks and look at our podcast on the average time the VIX explodes higher. I'm not talking about the twice a year stuff. I'm talking about every 2.5 years, you get a spike over 40 on the VIX. You can't help it. There's too much leverage in the system that they basically have to release the pressure cooker.
Right.
And we are now in that window, if you will. And by June, we're going to be past that window. I mean, we're going to be like extremely ready. And usually March and September is when these valves usually go. And this year, the October thing was hardly a thing.
Right.
Market sold off, but the VIX didn't rise to the level that it should have.
Right.
They kept suppressing it, Phil. But anyway, we don't want to beat a dead horse. I think there's really important information for you guys to understand. The plumbing in this system is in the basement. And all you're looking at is the 7 stocks up there, and they're telling you all is well. And there's icebergs and landmines and sea mines and everything and a brother coming at this market underneath the surface. And these moves tend to be violent.
Yeah. And it doesn't mean we can't go up into December, into year end. We absolutely can. Do we have a short-term pullback before then? We can absolutely have a short-term pullback. But what Bob is referring to is something that's probably going to manifest in a much greater scale after we start getting through January into February and March. So just keep that in mind. All right, guys. Well, that's going to do it for this episode. Let us know your thoughts on this. Do you think volatility is going to blow us up? It has in the past. Let us know your thoughts below. Otherwise, check out our specials over at tradegenius.co. We have our Black Friday specials, deepest discounts of the year. Love to see you guys in the room with us. We'll see you guys on the next video. Take care.
Trade Genius.